Here's my question for you. Are you planning a vacation in the next year? Or are you looking to renovate your house in a couple of years? Or are you simply close to retirement where you need a safe place for some of your savings outside of the stock market? Or are you like the rest of us where you just want to earn the most from your emergency fund? Here's the thing. If you need to save up money for any reason in the short term, then you need to park your cash where it can earn the most without the risk of losing any value. That's why I'll cover the best options for parking your cash, along with the top rates that are available today. But first, are you aware that 1 in 4 Americans don't even have enough money in savings for an emergency over $1,000? In looking at this chart by group that don't have $1,000 saved up, baby boomers are at 20%, and then my fellow Gen Xers are at 27%, and then millennial and Gen Z are both above 30%. That's a pretty frightening statistic for all age groups. So in the least, most everyone can get some value from this video just to see the top rates that are available for your emergency fund. And as a quick reminder, an emergency fund should be anywhere between 3 to 6 months worth of living expenses. That should be your rent, your mortgage, your car payments, utilities, food, and any other must-have expenses. On average, that would be around $33,000 saved up to weather any really bad storm. So aside from an emergency fund, what other situations are there for parking some cash? Well, if you happen to be handcuffed to your 1986 Rambler home because you have such a low interest rate on your loan, then you may be choosing to renovate since you can't really afford to move. Then in that case, you may want to park some cash. Or maybe you have an expensive vacation coming up that you need to save up for. Then again, you could be close to retirement and you don't want all your money in the stock market. Or you could be a savvy investor that really doesn't like how the stock market looks today. And in that case, you need to set aside some cash for a buying opportunity to get back into the market when it suits you. Whatever your reason, I'll go over several different investment options along with their rates that are available today. Just know that everyone's situation is a little bit different and you can certainly mix and match all the options to meet your specific needs. Regardless of your choice, there are roughly 4 key items that you'll want to consider with where you park your cash. And they would be access. How quickly can you get to your cash? Do you need to go through a process that takes several days? Or can you withdraw your money within minutes? The next one is obvious, the interest rate. Clearly, you want the best rate that's possible with the least amount of friction. Next is penalties. Will there be any penalties for taking your funds out early? And the last is requirements. Do you have to jump through a lot of hoops in order to get the advertised rate? Let's jump right in with the types of accounts that I'll speak to. And they would be high yield savings accounts, cash sweep accounts from a brokerage account, treasuries, and the certificate of deposit, often referred to as a CD. Let's start with the high yield savings accounts, where if you aren't getting at least 4% from your savings account, then you're pretty much losing money. And for those of you that prefer larger banks, well, Wells Fargo's Platinum Savings Account is at 0.5%, and Bank of America's Platinum Account is at 0.3% interest. So if you had $10,000 in savings for a year, that would be $5 from Wells Fargo and a whopping $3 from Bank of America over that entire full year. But if you were with one of a dozen different other banks that are offering at least 4%, that would be $400 a year just in interest that you're giving up. That's almost a car payment from just interest that you're not taking advantage of just because you want to bank with a larger bank. I've gone ahead and I looked up the highest rates that I could find for several banks today, and they range anywhere from 5.3% with Lending Club and down to 4.25% with the more recognizable banks like Capital One. Granted, every bank has a different set of requirements, where one bank may require a minimum deposit, or another may force you to have a direct deposit to maintain that high rate. So make certain to look up the details before you make a change. Let's move to the pros for having a high yield savings account. And they are that they are extremely liquid, where you can take money out immediately with a check or at the ATM. It also comes with the safety and security with FDIC insurance, should the bank for any reason fail. Another pro? Well, it happens to be that the rates today are as high as many other investments outside of the stock market. And they're also very low risk with a very high accessibility to your funds. And as for the cons, well, the banks can decrease their rates at any moment. In fact, now that the Fed has been dropping rates, many of those high yield savings accounts have already dropped their APYs. Next, the requirements can be a bit demanding, like needing to have direct deposit. Some banks may offer fewer features, like no ATM card, and some may also have a limitation on the withdrawal amount per month. Many of them are also online-only banks, and they don't offer in-person services. And if for any reason you need to wire transfer money the next day, most every bank does charge a fee for that. But if you're willing to wait a few days, then the regular ACH transfer is always an option and it's free. I find it a little bit weird that the banks have a limit on how much you can transfer per day via ACH, but they often don't have any limit on how much you can write in the form of a check. Strangely enough, old school checks still have a place. Who knew? Just a reminder that I do have a link down in the description with a large listing of banks that I track regularly to see the best rates that are available. So, regardless of when you watch this video, you can check out the sheet for more recent information. The next location you could park your cash in is Treasuries, which are like loans given to the US government, where they do pay you interest on the loan over time, and then they pay it all off during the maturity date. Treasuries that mature at 1 year or less are called T-bills, and those between 2 to 10 years are notes, and the long-term securities at 30 years, they happen to be called bonds. And here's a listing of the current Treasury returns during the taping of this video. And you do need to understand that the rates shown in the T-bills is unique in that they offer the items at a discount, and you happen to get the full amount when it matures. For example, let's say that you buy a 1-year bill at $95, and at the end of the year when it matures, and then they happen to pay you a full $100. This gives you roughly a 5% annual return that you wanted in the first place. The pros for Treasuries is that they're considered safe because, well, they happen to be backed by the US government. And the next is that they aren't tax advantaged, where you don't have to pay any state or local tax on the interest that you make on these treasuries. But clearly, if you live in a state with no state income tax, then treasuries are a little bit less attractive with often lower rates than other options. And the last positive is that the rates don't change. They're locked in. This is something that a high-yield savings account can't provide. And another plus for treasuries is that you can also have them in your IRA or your 401k if you want to. As for the negatives, well, they aren't as liquid as other options. If you want to sell them before maturity, then you have to sell them on a secondary market. You'd need to rely on your bank or a brokerage account to sell them for you, and that often comes at a fee. And there is one caveat to that, and it has to do with T-bills, the ones at 1 year or less. Now, there are some sites out there like public.com where you can buy and sell 6-month T-bills with no penalty or hassle. It's pretty slick, and they do have a calculator to account for the tax savings depending on your state. Now, they aren't sponsoring this. I'm merely sharing this option to those of you that may get some value from it, because you might not know it's out there. Another con for treasuries is they do tend to have lower yields than any other investments that I'm talking about. But depending on where you live, the tax savings may make up for it. Now, I'm not going to get too deep into the buying of new treasuries or even used ones on the secondary market. I do have several different videos that cover that topic in great detail if you want to learn more. Treasuries are great for those of you that are okay tying up your money and it not being as easy to get to in a pinch. This might be a good option for someone that's saving up for a down payment on a house, a home renovation, and also for those of you that are retired and just want a safe spot for your cash in case of a downturn in the market. But regardless if the market has a downturn or not, a person can't really argue with having a 7 to 9% return on your investment each and every month. And the best way to achieve that is by having your own business. And that's where today's sponsor, Limits Express, comes into play. They work as business managers to create and manage an Amazon store just for you, where they buy and they sell national branded products using your capital in business. They literally do all the heavy lifting in the day-to-day work. They don't get paid unless your Amazon business makes a profit. And in full transparency, I do have an investment with Limits Express to vet them out and to verify their process. With that said, my first 2 full months of sales came in at just over $12,000 with nearly a $1,200 profit. So that's a margin of 9%. And I admit that the process does start a little bit slow because you need to get all the approvals to sell the brands, but that's due to Amazon and its processes. So if you're interested in learning more, I'll have a link down in the description so that you can speak directly with one of the co-founders, Kyle. You can also check out their website down in the links below. And please, keep in mind that all investments carry some level of risk, and this is not a personal recommendation. The next area that I'm going to cover are certificate of deposits, or CDs. These are similar to treasuries, but instead of lending your money to the government, you're lending it to the banks. The upside to doing that is that banks come with the same FDIC insurance that you would expect. And if you're considering a credit union, they also offer insurance called NCUA, which is also very similar to the $250,000 insurance from FDIC. CDs do come in a lot of different formats, and they range in durations from anywhere from 3 months all the way out to 10 years. And most pay out interest at the monthly level. And the yield is calculated annually as an APY, or annual percentage yield. Okay, quiz time. If you bought a 6-month CD with a 5% annual yield, how much would you receive in interest from a $10,000 investment at the end of 6 months? Is it A, $3,000, B, $500, or C, $250, or D, $50? Go ahead and push pause if you want so you can figure out your answer, but for those of you that are guessing $250, you would be correct. Rates of return are given as an APY, or annual percentage yield, meaning it accrues over exactly 1 year. Now, if this were a 1-year CD at 5%, then you'd get $500 in total interest when it matures at the end of 1 year. Now, please don't be mad at yourself if you had it wrong. When I ran this survey last week, only 70% of the people had it correct. And that's why I do these little quizzes, so that I can help people course correct and learn more about the basics of investing. The pros for having a CD is that they are insured up to $250,000. But there are some websites like Raisin, which happens to be an affiliate link for me, and they do provide you with a dashboard where you can have CDs across a multitude of banks, all from one site. So if you had $2 million that you wanted in CDs, but you also wanted all of it insured, then you could easily do it on a site like this all in one place. And that happens to be a lot better than opening up an account with 10 different banks just to make sure that you have them all insured. Another positive is that they often have the highest rates over high yield savings accounts and treasuries. Now, I admit that that hasn't been the case for the past 18 months, but it's about to become that way again now that rates are dropping. Another item is that they are a bit more liquid than treasuries, but they often come with a penalty. But you can bypass that with a no penalty CD, but the rates tend to be slightly lower than a regular CD. And that's the trade-off for having no penalties. Another big positive is that the rates are locked in when you buy the CD. And the final plus is that you can have CDs in your IRA or your 401k. And the top con for regular CDs happen to be penalties for early withdrawals, where it results in you giving up 1 to 2 months worth of interest. They also are less liquid than a high yield savings account because it often takes a day or two to sell your CDs early. And a major negative for CDs that many people aren't aware of is that they can be called back by the bank. Meaning, if rates drop super low and your rate on the CD happens to be very high, then the bank can call it back and pay off your maturity amount and call it square. Even if it was a 4-year CD and it was only in year 1. But to be honest, I've never really seen this happen. But if you have, please share it in the comments so that others can at least have a heads up as to which banks have done this. Overall, CDs will work out better for many of you choosing between treasuries and CDs because the rates do tend to be a bit higher. But there will be a handful of you that live in states with extremely high tax rates, where the treasuries do make a little bit more sense for you. And the whole reason for investing in CDs would be similar to treasuries, but with them being slightly higher rates and more liquid, you could have a lot more reasons for choosing CDs, like saving for a vacation or a large purchase like a double-story tiny house on Amazon. I'm not gonna lie, that almost looks too good to be true. There are a ton of details on CDs that I won't be able to cover today, but I will list several other of my videos that you can check out down in the description that review the entire process in detail. And here's a listing of many of the top CD rates that are available today. And as you can see, they vary a great deal. And I've also included many of the no penalty CDs where I happen to find them. And as always, I'll try to have a link down in the description so you can research all of these on your own. And just a heads up, I will be providing a comparison chart of all the different rates being offered by treasuries, CDs, high yield savings accounts, and brokerage sweep accounts towards the end of the video. Now, the next area that often gets overlooked is the brokerage accounts offering a cash sweep. Let's say that you use the site Vanguard, which sweeps your uninvested cash into a federal market fund yielding 5.19%. And there are a lot of brokerage accounts that offer this same feature to move or sweep your uninvested cash into an area earning you interest. However, there are some brokers that require a monthly fee, like Robinhood charging $5 to receive a 4% yield a month on uninvested cash. Also, some sweep into funds, while others sweep the cash into banks that are offering FDIC coverage. These have many of the same pros and cons that you would expect from a high-yield savings account. The upside resides more with those of you putting your cash on the sidelines, waiting to invest it in the market. If that's you, then you truly need to check with your brokerage account or look to move to a new one that offers a cash sweep feature. And here's something that many people don't even realize. You can move your investments from one brokerage over to another without having to sell your investments. And this is referred to as an in-kind transfer. And many of the brokerages are offering some huge bonuses for doing this. As an example, Webull's offering 3.5% match on a transfer amount. And that just happens to be one example, where it certainly could be worth looking into if you don't like your current broker. Here's a listing of some of the top brokerage accounts with cash sweep that I was able to easily find. The list could be much larger, so if you do know of any that I missed, please share them in the comments and I'll try to add it to the list. I am also showing sort of a total view of all the different rates by the different investment vehicles that I covered today. And if you've seen any of my prior videos, then you know that I often have a spreadsheet sharing all of my resources because my entire mission of being on YouTube is really to help others learn and grow into their financial path, hopefully to early retirement. I hope that you found some value in today's video, and thanks so much for watching.